Hello and welcome to a brand new series of GJ Management Consultant. We are going to start a new series, and this series is of IND AS. So we are going to start with IND AS fresh series, and our endeavor is that we're going to cover starting from the scratch, describing what is IND AS all about, what is its applicability, in what manner it has been made applicable to the listed and non-listed company, and then definitely we'll take it forward and take each of the IND AS and we'll try to explain its applicability, its recognition criteria, presentation, and all the other aspects of IND AS in detail. And we are going to explain each IND AS in a separate presentation. And by the end of this series, we are going to create a compendium of all the IND AS, and that can be consumed as a ready reference by a person who is going to, understand who want to understand IND AS in conceptual manner and want to have more understanding. It can also be used by the students who are either pursuing their CA course or CMA course and CS course as well, wherever they have the IND AS in their curriculum, and this is going to help them and would be a refresher for them to get the understanding of the IND AS. So, what is it that we're going to cover in the first deck? So, this is an introductory deck. So, which means that largely we are going to talk about the IND AS, why IND AS, what is the logic because of which IND AS got introduced, and how it is being made applicable in a phased manner. Then what are some of the key differences between the IND AS and the earlier gaps, and then a quick snapshot of on the list of the IND AS that we have as of today. So let's just start then. So total representation itself displays that we implemented, or instead, in fact, India's got implemented in the phased manner and in the four phases. We're going to touch base each of these four phases in detail. So, what we are going to cover today. So, we are going to talk about the phases of adoption, which is largely explaining the picture that we have in the first slide. We're going to talk about what is INDAS. We are going to speak why IND AS. We are going to understand what is the regulatory framework. So, which means that what are the governing bodies who regulate the IND AS, who which body do what. For example, we have ICAI as one of the body. Then we have Ministry of Corporate Affairs as one of the body. Then for NBFCs we have RBI, and for insurance company we have IRDAI. So there is a regulatory framework or the kind of the governing body that has been made to ensure that we are adopting the Indias in the form and shape at which it has been designed. We're going to look at the key area of differences between Indias and the gap, and then the list of the applicable Indias. So let's just move to the first slide then. Okay. So let's just quickly have a look on the phases of adoption, that how India is being made adopted in the context to Indian scenario. So first phase one was the mandatory applicability of India, and it was from 1st April 2016, and it was made applicable to all the companies whether listed or unlisted, and if it is net worth is greater than or equal to 500 crore, and to confirm the net worth to be checked for previous 3 years, and if in any of the 3 years, last 3 years, the net worth is equal to or more than 500 crore, then they need to mandatorily adopt the Ind AS to represent their financial statement. So that was the rule from 1st April 2016. Now phase 2, which is like again a mandatory applicability, which came from 1st April 2017, brings certain changes. What does it say? It says that it is a listed company or is in the process of being listed which is as on 31st March 2016. So which means that the capping which was there of 500 crore for both unlisted and listed companies, that capping got removed, moved for the listed companies. So which means the all listed companies were required to mandatorily adopt the Ind AS for presentation of their financial statement, and the only exclusion was the companies which were listed on the SME board, for which the limit for the net worth was less than 25 crore. That is the only exclusion. Otherwise, all the listed company are mandatorily required to adopt the IND AS to represent their financial statement. And for non-listed company, the turnover, the net worth got reduced from the 500 crore to 250 crore. So which means that all the unlisted companies, if their net worth is equal to 250 crore or more than 250 crore, but less than 500 crore, they are going to mandatorily adopt the IND AS from phase 2, which is like from 1st April 2007. And for this purpose, the net worth needs to be checked for last 4 preceding year rather than last 3 preceding year, which was there for 1st April 2016. Third phase, which speaks about 1st April 2018, the applicability for all the NBFC banking companies and insurance companies. All the banks, NBFC insurance company were required to adopt the IND AS to represent their financial statements if their net worth is equal to or more than 500 crore. And in the phase 4, it is reduced from the 500 crore to 250 crore. So which means that as of now, if we speak currently, there is only one exclusion for the companies to not adopt the IND AS to represent their financial statement. That is the unlisted company with net worth less than 250 crore, and another list wherein company is listed but they are listed on the SMA board, in which case their net worth is less than 25 crore as per the current norms. So having discussed that, let's just quickly have a look at some of the key terms. So we are talking about net worth here. So let's just see what net worth is. So net worth is equal to the paid up share capital plus free reserves, the security premium account after deducting the accumulated losses, deferred losses, and the expenditure and the miscellaneous expenditure, which is not written. So only capital reserve, which is on account of the promoter contribution and the government fund, those are included as a part of the net worth. It is also important to look at a couple of the notes here. First, notice that if IND AS becomes applicable to any company, then IND AS shall be automatically made applicable to all the subsidiaries, holding company, associates, and joint venture company. So, which means that if standalone financials of that company permits it to be falling under the adoption of the IND AS, then to any other company which that standalone company is associated in form of the subsidiary, holding, joint venture, or associate, then that company also needs to adopt the IND AS to represent their financial statement. And then quickly have a look at this second note, which says that whether AS to determine whether IND AS is applicable, the net worth to project for immediately 3 preceding or the 4 preceding, depending upon the date of the applicability. And in any of the year, if the net worth is breaches the threshold amount, then they need to adopt the IND AS to represent their financial statement. One more point which I want to make here is that if at all companies who are less than the threshold limit of 250 crores specifically for unlisted company, if they voluntarily want to adopt the IND AS, they can do so. But if they adopted once, then they have to continue the adoption. They cannot drop that adoption. So with this, we are clear in terms of which companies is to adopt what. Let's just quickly move to the next slide and see what is IND AS and why IND AS. Okay, what is IND AS? So IND AS are the Indian accounting standards notified under the Companies Act 2013, designed to bring Indian financial reporting in line with the international financial reporting standard. So intent was very clear. With the many countries having adopted the IFRS, it was always good that Indian companies should also adopt the uh, standard which is equal, which are like IFRS or they're equivalent to IFRS. So IND AS is like equivalent to IFRS. So which means that once the Indian company adopt the IND AS, then they are in a comparable position whenever they want to compare their financial statements with any global company, or if Indian company is having presence globally, that will make their work very easy, because they do not need to prepare multiple financial statement. They can prepare the financial statement as per the IND AS, which is in line with the IFRS. So there are certain changes here and there because IND AS has been created largely with keeping in mind the Indian environment. So all those changes for which there is a gap between the IND AS and IFRS, those needs to be adjusted accordingly to represent the financial statement under IND AS into IFRS. So key characteristics based on IFRS but tailored for Indian environment. Principle based globally accepted framework, high emphasis for fair value. which is one of the most relevant point in the IFRS, substance over form, and then the transparency, and implemented in the phase manner. So we have already looked into that all the listed company are mandatorily required to get themselves get onboarded on the IND AS starting from 1st April 2017. Exception is only the SME listed company with net worth less than 25 crore. An objective is to create a unified, transparent, comparable, globally aligned accounting framework for the Indian companies. Why India's? Most important, global comparability. So as I mentioned that most of the countries have adopted the IFRS. So just to make sure that financial statements are comparable with the companies who are operating from India, it was imperative that we should adopt the similar uh, kind of the framework. And India is largely on the same line of framework with IFRS, with some exception, and those needs to be reported separately. So when we have the global comparability, it helps us to enable the cross-border investment and align the reporting practices with 100 plus IFRS compliant nation. Transparency and reliability, strong disclosure, higher focus on the fair value, and improved governance and the investor confidence. Better access to capital, international investors understand the IFRS style reporting. So if we want to get our company listed in the US or let's say for that matter UK or any other country, this will help us because our financials are largely in line with the IFRS and easier listing for the global stock exchanges. Improves consolidation because group with international subsidiaries follow the uniform standards and reduces the complexity in the consolidation reporting, and clear communication and the principle based approach help us to have the larger transparency and the enhanced financial. So this is a quick snapshot about what is IND AS and why IND AS, but intent is just to make sure that when we have started this introductory session on the IND AS, we just want to make sure that we are covering some of the very basic concepts in the IND AS, so that as a beginner, if somebody wants to have the quick understanding on the IND AS, he can use this presentation and get himself or herself equipped with the concept. And but for experts, definitely this slide may be of not much of use because they know that what is the logic why we have bring in IND AS and for what purpose it was brought into. So let's just move into the next slide then. Okay, let's just quickly have a look at two aspects here: regulatory framework and the structure of India as a framework. So, regulatory framework means the bodies that control the implementation, regulation, guidelines, and ensure that auditors are managing their roles with respect to India's in a correct fashion or not. So, we have the Companies Act through which the entire enactment of India's had happened. So, Section 133 gave that power to the central government to notify the accounting standards. And then we have Schedule C that describes the financial statement, the format in which it has to be created. MCA, which is called the Ministry of Corporate Affairs, that issue the notification, amendments, and clarification. We have Institute of Chartered Accountants of India that provide the guidelines for the implementation, some guidance note, expert advisory opinion, and the educational training material. Then we have National Financial Reporting Authority, which oversees the compliance and conduct the quality reviews of the auditors. And then regulators like RBI, SEBI, and IRDAI to ensure that all the companies, banks, and insurance company are adopting and implementing IND AS as per the required statute. Then structure of the IND AS framework is quickly touch base upon the some of the key components which are the standards we have IND AS starting from 1 to 117, key guidance note, implementation guidelines. Then we have key components, like these are the components basis which we study each and every IND AS. So when we study the IND AS in detail, we're going to touch base on each of these criteria: recognition, measurement, presentation, disclosure. And these are like broad themes which are like financial statement, presentation, financial instrument, consolidation, fair market value, fair value. So all these are concepts. All these are is having a separate IND AS on which we're going to speak as we move forward. So like leasing, we have separate IND AS, revenue, we have separate IND AS. So all these would be a separate IND AS which you're going to talk about in detail in the coming days. So let's just quickly move to the comparative analysis between the IND AS and the previous gaps. Okay, so let's just quickly have a look at the key differences here. So we are going to keep this slide very short. We are not going to get into the detail of each and every differences, because we are going to have a look at the each and every index separately in detail. So these differences are just to highlight some of the key key areas wherein India's is going to have a edge over the earlier gaps. So as we speak, the first one is fair value versus historical cost. So India's is largely have the recognition of the fair value versus the historical cost in the earlier gaps. Second one is the consolidation rule. Under the consolidation rule, in the earlier regime, that was largely on the basis of the percentage of the holding. I think in India's, which is IFRS 10, it is largely on the basis of the interest in the investee company. So even a small interest in the investee company needs to be shown as in consolidation number. So we'll speak about that in the detail in the India's when we're talking, which are going to talk about the business combinations. Revenue recognition, which was largely basically AS9, has been replaced by five-step model as per in AS 115. In AS 109, which is largely on the fair value vis-a-vis largely the cost model under the earlier gap. Lease 116, which is like uh, has changed the concept of leasing with respect to lessee, wherein operating lease and finance lease concept has been done away. So, which means that the right of use asset has been introduced for the lessee accounting, and the more detailed disclosure, giving the more qualitative insights and more judgments and more disclosures, so that transparency is the key enabler. So, in a nutshell, the IND AS has an edge over the earlier gaps in terms of the disclosures, in terms of the recognition criteria, in terms of the adopting mechanism, whereby the focus is on the substance rather than on the form, and making sure that largely all the recognition is being done at the fair value. So with this, let's just move to the last slide of this introductory deck. Okay, so this is the concluding slide, and we have listed all the Indias that has been rolled in now. So 40 Indias has been rolled in now, and we are going to speak about all these 40 Indias one by one in the coming days, and try to cover the recognition, measurement, disclosure aspect of each and every Indias. And it's our endeavor. If at all you have any further comments, you can write back to us, and we are happy to provide you detail on that. So with this, we'll just move to the last thank you slide. Okay, so this is the thank you slide. I want to thank all my viewers and subscribers for watching this video till end. Please cascade it to all the relevant people, to the students you feel that who want to understand India's, to all the people who are working professionals who have been disassociated from India's for quite some time. This would be a refresher for them. They would understand the concept, and it is our endeavor that we are going to present each and every India's with the details, so that it is kind of a snapshot which can be referenced by any person if they want to understand the India's in detail. So with this, thank you. Have a great day and goodbye.